Good morning, everyone. Welcome back. It's a replay. Another boring market day. It's likely to change pretty soon. That's usually what happens. So there you have it. And it's been going sideways now for a week. The economic reports are out. It was not funny. It's interesting. We all get confused about information at times, but I was listening to the commentary on CNBC, which is usually better than Fox as far as economic reports go. And they were just saying they don't get it. They don't get the numbers. I don't know specifically what they were saying, but the conversation was, the numbers that are coming out just don't make sense. And considering the government numbers, maybe it's on purpose. I guess we'll see in time. However, you know, markets have been tightening up now for a little over a week, and so there's been compression, and that's usually followed by an expansion. And we're going to see which way it goes. Most times, the first move is the wrong one. There's going to be a whipsaw. Um, and it could be whipsaws in both directions, but we'll see. But usually, when this is the case, the market is uncertain. Where at this point, as the news that was coming out here, um, market liked it. Obviously, market went up, and it got a little ahead of itself, and is consolidating those gains. The expectations for higher prices are waning a little bit, and the belief that it's going to go down, waning a little bit. And so that's what happens as it starts to go sideways here. Um, right now, as you can see, markets are up a titch. How much is a titch? Whatever. It's a little bit. You can see where my cursor is. It's right at the top of the trading range. So the economic news didn't do much to get the markets excited to move at this time. So maybe tomorrow's news or whatever's coming out unexpected. We'll see which way things go. So as things are compressing, and we look at these SPX numbers, which were way far apart at one point, they're coming together. They're compressing. So well, yesterday was a down day, and usually the put strike would go lower. It came up 30 strikes, and the call strike came down. So they're compressing. They're coming together. And what's likely to happen, I don't know, today, tomorrow, next week, one of these numbers that the vast majority of the time, which are never hit, one is going to get hit. So take that as a heads up, you know. And then, look, we always start every day with what we believe to be where prices won't go. That's the essence of any credit spread. I just don't believe prices are going to go there. And as related to these, I don't believe they're going to go there today, but we're going to be wrong at some point. And as things tighten up like this, being wrong is coming closer. The day it happens, we're going to see together. In addition, I just posted in the Telegram and sent it out on social media, which I do most mornings. This chart and commentary to also be aware. Look at this 5-day average true range at 43. The last time it was at this level, things started moving. And if you go back and look at this day, just before things went into a coma, it was 132. So whether we're looking at average true range, we're looking at these strikes coming together, we're just looking at bar by bar, things are going to pop at some point, of course. We use the analogy, the spring is getting wound. It is. And we're looking for an event bar, right? Some kind of range expansion bar that triggers some type of movement. And we assume it would be up because it was preceded by this. Now, if we could get some kind of correction bar, that would increase the odds of us not being whipsawed. And that's why having a fake move in one direction and then, say to the downside and it comes up, that would be great as far as along. And so again, we're just waiting for something to happen here as we sit through these boring moments. You can see the 60, well, that's the 15-minute chart, just, whipping back and forth, back and forth. It's in a trading range. So it is what it is. The one thing that is great as far as, being in the green room is that we had an amazing discussion yesterday where we talked about retracement levels and bar by bar. And I posted the um, summary into the community. So if you want to go in there, I've been posting some videos and some helpful information. And I posted the summary that, Zoom does for us at the end of the day, which is great. And it gives an overview of what we did. Yeah, wasn't it great, John? And so, I'm hoping, and, we had a little talk about those in the room maybe participating. And I think it was Steve that suggested, hey, well, maybe once a week or something, somebody in the room would say, hey, you know what? Take the mic and share some trades, one trade, and we could have that kind of a discussion because everybody learns. And it could be one that worked out well. It could be one that stunk up the place. What did I miss here? Because I thought it was good. All of that conversation where we dissect a trade or a concept is great. And so whether, it doesn't matter, we talked about swing trades, intraday trades. The conversation actually started with Alex mentioning, oh, the low for the day is in on the S&P. And so from there, I took that opportunity to talk about why would he say that? Let's, dissect that and break it down. And then that led to other things. And so, as far as intraday trading, we covered a lot of stuff. And so, those of you on social media, if you're struggling, which we all struggle at some point, and sometimes even doing for a while, that bundle that I'm posting there for intraday specializes on just that. And everything that's in there is what you need as an intraday trader. All right. So let's see what other markets are doing here. Let's see, not too much is really moving, but we go through them every day. I can see this might be like this one really bit us a little bit the other day because it looks so good. And well, I really got to see the diamonds, but I think it was this day over here. This little bottoming action. Let's go look at the diamonds. Get rid of the overnight trend. I think it was kind of like over here, right? It just was basing. Oh, it was right here. There's base here, and it had room to go up, and it started going up, and it just collapsed. It just collapsed. Everything held up relatively well. This was the best looking one. Sometimes that happens. So this morning, you saw the futures, they're up a little bit. This is up a little bit. I don't know if this is going to get going, but it's certainly, if it breaks down below here, this is the idea of a void. And so I've took that volume profile in here, but just to reinforce this idea of the void. If I put that there, you see that hole right there? It's a gap and there's no volume spikes. That's a void. So sometimes it's just multiple bars that just fly up, like that, and it creates the void. So this is like a visual of the void concept. It just makes it, I think, so clear. In any event, this has room to go down. So as an intraday trader, I'm interested in that if that's in the cards, because that's a big void. And that will not change the opinion on the daily chart being in an uptrend, and buyers should step in. Just it moved up a lot. Buyers want to step in here and buy cheap, right? Sell higher. They're not getting that opportunity. So they're waiting. They're waiting. NQs, just marking time. Maybe this is going to get going. This is what we call bullish price action. I'm just going to remove this for now. We know what's over there to the left. And as this goes sideways at the top of this bullish wide range bar, it's bullish, bar by bar, bottoming tail bar, red bar ignored. It's the beginning of the day, but this is looking even better. That might actually break out. Of course, with that in mind, any downside blips that happen, those in the trading room, the green room, that are selling these naked puts and doing great with them, if this blips down, we'll look to the left and to the downside and see where there's juice. And that's been a high probability strategy. Sometimes it gets a little hairy in management, but you got to know what you're doing. All right, so this looks good. It's neutral for now. S&Ps looks good, neutral for now. We already looked at YM. The Russell looks pretty darn good. All right, so this has got, you can see a little bit more of a bottoming action, and it's starting to creep to the upside as it gets to the prior high area there. So that looks good. Mid caps, similar, looks good. Micro caps, this is, I typed that right. IWC, is it? Yeah, this might break out. Right? This is one in the ETF letter. The ETF letter's been doing quite well. And it's in the gold mine, junior gold miners, DXJ. Got in as it started to move up. So that looks amazing. And let's look at gold, which is up near a resistance area. So it stalled. 100 MA, minor resistance, had a very powerful move. You can see the big weekly bar there. It's up at the 20 MA, which is equal to the 100 MA. You can see this is the 100, the black one. That's on the weekly chart, about the same. For the longest time, for years, I didn't have any 100 MA on my charts, but I got tired of saying it's 20 MA is the same as 100 MA. So there it is, and you can see how it lines up. So you don't need to put the 100 on there if you're looking at your 20, but there it is, everything all lined up there. And of course, you just look over to the left to see if one of these moving averages lines up with some price data, which is the only thing that is objective and clear, and you can't manipulate it versus, I'm going to use exponential, or I'm going to use, some Fibonacci number or weighted ones or whatever. Things we might like to put on there to think it gives us an edge. All right, Bitcoin, is it ever going to move? That's not moving either. So what do? You don't do anything. You wait. That's what we're doing. We're waiting. We're just being smart to sit on our hands at times. But there's silver, that's doing little consolidation after the move up. So sellers aren't hitting the bid, getting out right away. They're holding on, and that means they believe it's going to go higher, but they're waiting, of course. Is the euro a good example of a price correction through time? Let's take a look. Thank you for asking the question, which you often do in the room, and that we appreciate that. So this is a correction through time. What does a correction through time mean? That's a fancy few words that means it's going sideways. Now, if you put that in context of other concepts, that was a big part of our conversation yesterday, was putting different concepts together for formulating a belief. So what does that mean to us? So if it's going sideways through time at an area of resistance, that's bullish. And it was preceded by two big green bars up. It's just going sideways like everything else. Now, when you look at something like this, the thing that jumps out at me is when I think of shakeout patterns. it's going sideways below this area, which is still okay. It's still bullish price action, but what if it was going sideways where it actually reached the top of that area? In addition, shakeout patterns tend to be, well, more violent, and then they don't consolidate so much as long as this did down there. So there are these different structures, if you will, on how things set up that you have to put these concepts in alignment with. Over here, it was like, oh, we think it's going to go down. And so this all started with the Fed not raising interest rates, where this here, the 13-week was spiking higher ahead of the meeting. And then they didn't do anything. And this crashed. Exaggerated comment, but it had a little mini crash. And so was that those interest rates came down, the dollar dropped sharply, the euro went up, and other currencies, and that got gold moving. And now all of a sudden, isn't it so, I would say, under suspect that all of these economic numbers start coming out favorably for the Fed to sit on their hands? So our job is to just look at the charts and see what they say. And right now they're just telling us, keep the powder dry. We're waiting for something to unfold here. All right, let's look at a few other things here. Of course, we have to look at oil, which is not doing anything, right? The strait is under the U.S. control. Iran is saying, you know what, Trump, F off. Go have at it. What are you going to do? They've thrown down the gauntlet, so to speak, and we'll see who's going to blink first and what's going to happen. And that's part of what the markets are waiting for, besides inflation numbers, just day to day, oil so far, it's not as tight as looking at the S&Ps or anything else, but, the distance between the swing highs, think about that, the distance between swing highs and lows are getting tighter. So it's a different type of compression. And the trend line people would do something like this and drawing that, or they're doing, they got their little down channel there and it's going to spike up for whatever reasons or whatever it's going to do. The chart artists will get their Ichikumi clouds out or whatever. Look, the highs and lows are tightening up. We're all waiting for something of significance to happen. And interest rates, here's bonds, moving up. So we have bonds moving up, which means interest rates, right, are moving down. Oil's down a little bit. Markets aren't breaking out. They're up a little bit, but maybe they're going to break out. We're waiting. So with oil moving down, even though it's not significant, and interest rates are moving down, that kind of communicates risk on. We're just going to see how that plays out. SOXL, semiconductors doing nothing. Well, you got Cisco down. So the AI theme, this is gapping down a little bit, not a big deal. So, all of that conversation, the takeaway is not much of anything is happening here of significance, but we're anticipating that it's coming. So just stay alert and let's see what unfolds. Just flipping through other things. See anything else that's moving. Software, not doing much of anything here. So that's it. I've talked enough. I'm done.
Good morning. Yes. Blip there. Very start. Zoom. So even though the markets have been very narrow, we've done a great job finding trades. Stock options, ETFs. Let's see what we got today. This was one I was talking with the room about yesterday. We were comparing this with a couple other stocks, and I was explaining why I love this one the best. So we can do a half lot. Yesterday's high. Let me set an alarm. 2024. Oh shoot! My minder says 2025. Okay, I'll just watch it open. DTC bar. We're in a half lot, so that one poke set my alarm off. But we're gonna add the back half over those prior highs, which is over 28.77. XLK. I don't know about the target, but for us here, I wouldn't give it to the ETF letter because there's not a big enough void. But I like this target 193-ish. IWM though, I'm gonna give them. That's a bull rectangle breakout. Gapping up here, 30. Shoot, it's gapping up a dollar. Here's yesterday morning. I was watching it to get in on a pullback. I guess I didn't like the way it came in so hard, but it did give for those brave ones. Perfect entry there in the gap. So Papa Sierra alarm. This is actually interesting. You got two 1, 2, 3s in a row. Here's 1, 2, 3, and here's another 1, 2, 3. But the problem is I looked at the volume, and I mean average. It's I don't know. Look at the 15-minute chart. It's kind of spotty, but it has a beautiful void. So I like the pattern. Just wish old Bill Ackman had more volume. Iran, we did a put spread yesterday, igniting gap breakout. That looks like news to me. That thing just ripped $4. So I taken a stop under this igniting bar. ARQQ. I think I had a down alarm. No, that was a bad alarm. Reset. And so that's fine. Those are my alarms. Let's go to earnings. I did 2 earnings trades yesterday. This was one of them. Cisco here, bull rectangle, bullish pattern. I sold the 110s for 90 cents. I still have $5 of comfort. So I'm 90% sure, unless it just tanks at the open, that I should have an open profit. But I'll give it 1 or 2 minutes, let the spreads tighten. But in terms of a new trade, I don't see anything right now. Open house. Stub. I read there was an article in the journal. I just saw the headline. It said, never mind. I thought this was Stub Hub, but it's Pugnacious. What happened to StubHub? Did somebody buy them or they change their symbol? Because I said, people, it's irrelevant, but the article said people are having a hard time getting refunds from StubHub.
Do you read about all these companies now that are getting their tariff money back?
Well, I'd rather get them back, but what is the underlying his story implication.
Because the government, well, the judges told Trump he had to give the money back. So now they're getting millions of dollars, and some of
Well,
them are saying they're going to give it back to the consumer, but we'll see.
yeah, I think Apple got 1.5 billion. I think I
Yeah.
read. Well, all right, this forced that we're continuing with earnings. This was a bottoming pattern I absolutely loved, and I said yesterday, I'm like, man, they're bullish on two earnings, and now they're getting whacked. That's why, we trade earnings, but just gotta accept the risk. So gapping down to 220, kind of a big nothing right now, but I have it here in the bottom right. My bias would be 30-minute high, 1 DTE put spread. Sue's, it's a sloppy buy setup. I don't like the way it trades. You're going toss, gapping down, call spread. Says Z would have been an adequate bottoming pattern if it opened flat, but now it's getting whacked. That's a bearish igniting gap in a downtrend. That's ugly. And go. Overlapping bars. Well, let's see, I was about to say I would consider a 1, 2, 3, but it's gap into 1150, so forget about it. This was in the weekend letter as a 1, 2, 3, 4, and it never triggered. And then it had earnings last night. Let's see, 2150. That's worth watching. I will put that in the window of their computer. EQPT. Achlet. This one I sold. Can you believe I sold the $10 puts and got 30 cents? Well, let's see. I'm just gonna bid. I don't know if they probably don't have penny increments, but I'm gonna go ahead and bid 2 pennies because it's 8 days left. Oh, 2 order some. Stay gapping down a mess. USIO would have been a great 1, 2, 3 also. It's gapping up, top of the range. It's worth watching a pullback. CIE is a grinder, kind of a rising wedge. This trades wild. I don't know, it doesn't have a big enough void. Delete it. AOSL, that's percentage wise getting blocked. But gapping down here to the prior low. Let's see what it does. $208. Man, that's a mama bullish gap. Is that a defined term? Mama bullish? Nothing to do. So watch the pullback maybe, or if there's put spread. That's too extended for me. Red Robin. Oh, and I heard Wendy's was popping on buyout rumors of somebody wanting to take them private. STN, that's a good bottoming pattern. I have an alarm at 74.80, I think. Let me put it on the big computer too. Newell. All right, Newell's a go. That's fine. Newell, 622. Hey, Sam, I think the Newell was yours on this wide bar. And I said I would watch it. I'd prefer 1, 2, 3, and that's what we got. Our RIN gap is holding well, so put spread doing great. Alarms. I had an H-lit alarm go off. I had an alarm at 14, see? But I'm fine, I got the 10s. Let me check the spreads. 10s are 0 by 10. So yeah, see, they're not posting me. But you know what I'm gonna do is try to buy the 12 and a halves for 5 cents. And then I got a free put spread. There you go. Our Q's coming in hard. Yeah, we're in it, Greg, and I said, yep, for a new trade or an ad. I loved them. Daily, weekly look great.